ภารกิจด่วนก็ต้องฝากขออภัยนะที่นี้ด้วยนะครับก็ now I think it should be the time to start so I would like to ask everyone to join me in welcoming our guest speakers first Mr.John Golifer and คุณสฤษดิ์ โชคชัยนิรันดร์ครับ so I hand over the stage to คุณสฤษดิ์ please
สวัสดีครับทุกท่านนะครับก็รู้สึกเป็นเกียรติรู้สึกตื่นเต้นครับว่าวันนี้มีท่าน IR หลายท่านนะครับมีประสบการณ์หลายท่านซึ่งจะมาพูดคุยกันในวันนี้นะครับก็ตะกี้ได้คุยกับทางจอห์นไว้นะครับว่าวันนี้อยากให้เป็น discussion มากกว่าให้ทางจอห์นหรือทางผมเนี่ยคุยกับท่านทีเดียวนะครับก็ยังไงเดี๋ยวถ้าท่านมีคำถามหรือมีอะไรเนี่ยอาจจะยกมือถามหรือว่าอาจจะส่งโน้ตขึ้นมาก็ได้นะครับถ้าสะดวกนะครับก็เดี๋ยวยังไงเดี๋ยวขอพยายามถ้าจอห์นพูดเร็วไปก็อยากจะให้ผมแปลหรืออยากจะให้ผมอธิบายให้ชัดเจนขึ้นก็ยินดีนะครับก็ welcome John I met John in London in January and we discussed about Thailand IR and its development for the past years and so I invite him to come and talk to us about the trends in IR in the UK, in Singapore, and in the world. John has experience in SDX, right, in UK IR as well, and he can explain a little bit more about himself, and he can tell us more about global trend in investor relations. John, do you want to start first?
Well, thank you very much, Kun Sarit. I'm absolutely delighted to be here. And first of all, I'd like to thank Kun Surafond and the team at the Stock Exchange of Thailand. Exchanges are familiar to me because I worked for 11 years in Singapore at the Singapore Exchange. So actually, I know the SET fairly well, although I haven't had the opportunity to visit Thailand in the last few years. So I'm absolutely delighted to be here. A real pleasure. And it's great to see a wonderful turnout as well. I've just had the opportunity to catch up with an old face, an old friend, who probably knows more about IR than I do, and he's actually in the audience. I won't say who he is. And also another gentleman who clearly knows as much about IR as I think any practicing IRO, whether in Singapore, the UK, or elsewhere. The purpose of today isn't to really tell you how to do IR or present all about IR, because I think as practicing IROs, every day you're doing it anyway. But what I thought would be useful is just to share the perspectives of a former IR officer of many, many years. Prior to that, I was a banker in corporate finance and equity capital markets. So I've had a long history of working with public companies and recognizing over time the evolution, the development, and really the emergence of what I think is perhaps one of the core functions for any listed company, whether in Thailand or elsewhere. So if I can share those perspectives with you, I think that would be useful. Of course, I have a deck of slides. I could rattle through them, but I think what would be more useful, as I'm sure Kun Sarit was saying, is if you wish to question, if you wish to clarify, if I'm not making sense, or you think, well, hang on, how would that apply here? If you just put your hand up and engage, have a bit of a discussion, I think you'll find it a lot easier, because apparently, according to Kun Sarafon, we've got up to 2 hours. You don't want to hear me talk for 2 hours. I promise you I probably could, but I'm not here to talk for 2 hours. So if at any point you think, well, hang on, how does that apply, or he's not making sense, just put your hand up and let's try and have a bit of a discussion. I don't plan to speak for more than 45 to 60 minutes, because I'd really like Kun Sarit, who was sharing with me the perspective from Thailand, given his company does a lot of research on the Thai market, to also put it into context and share with you some of the issues that he's recognized from feedback from the investor community. And hopefully between us, we actually come up with a presentation that's useful to you rather than just another presentation. And as I said, the key to that is you questioning us. We don't know everything, we're not right, and you engaging with us so that you actually get more out of this session at the SET this morning. So what I'll now do is I'll just start going through some of the slides. The first few are introductory, so I won't spend too long on those, and then I'll get into some practical aspects of IR, which I hope are useful. Some will be familiar, so I'll probably skip through those if I think you obviously already know that, unless you stop me. And then I'll try and get into some more interesting aspects, because actually when I look at the title of the presentation, Global Trends, as was introduced, I really ought to be sharing with you the perspectives from the markets that I've worked in, and I think that's more useful. Where's IR going? Why is it going in that direction? What does that actually mean for practicing IROs who are engaging with international investors? So actually you're no different in terms of your audience to what I was doing in Singapore, or IROs in Singapore are doing, reaching out to international investors, or indeed in the UK. So with that in mind, think of some of the issues and how they might affect you. If I don't make sense, then question me. I think we've more or less covered that. I'm lucky enough now to be working at the oldest professional body for investor relations in Europe. The UK set up the Investor Relations Society in 1980. I happened, after a long career in this part of the world, in Southeast Asia, to decide it was time to go home, landed on my feet and ended up working in an area that I'm familiar with. So I actually run the Investor Relations Society in the UK out of London. I was delighted when Kun Sarat strolled in one day to have a chat, and that's how we ended up here today. Interestingly enough, I actually lectured at a university in Singapore. We have a business university, Singapore Management University. And interestingly as well, there was a need a few years ago, 2008, 2009, post-crisis, to start thinking of communications at the school more broadly. And we introduced an investor relations course, which I created and then lectured for 4 years until last year. I'll mention briefly the Investor Relations Society. Interestingly enough, a lot of the membership comes from overseas. So those 660 members include roughly 80 to 90 overseas IROs. And when you're in an overseas market, as I was for a long time, you tend to look at other markets. We were talking about this earlier. Sitting in Singapore for a long time, we tended to look at Australia, we tended to look at Hong Kong, we naturally looked within Southeast Asia, Bangkok, Kuala Lumpur, Jakarta, as well as Singapore. But when it came to thinking how we could try to match developed markets or more mature markets, we of course would look at either New York or London. And as you know, in terms of history, Singapore and a few other countries are pretty similar or familiar with the UK's law system, the UK's principles-based approach. So it's natural that we would look to the IR Society and actually take on some of their material, for example, in Singapore. I know Malaysia did the same, Hong Kong have done the same. And it's not a question of lifting wholesale what you find in London and taking it to your market. It's a question of looking at the best practices, which, as I said, should apply to any IRO, addressing any international audience, because your target audience, international investors, is no different to an IRO sitting in Singapore or indeed London. Of course, there are some differences, but in essence, you're trying to attract capital to your company to help it grow in accordance with whatever your plans and strategy are. So that's no different. So the UK IR Society has actually been very successful in reaching out to other markets. We work in Southeast Asia. I mentioned we work in Hong Kong. We're actually affiliated to the Japanese IR Association, which is the longest standing IR association in Asia. They use our material and of course translate it into Japanese and credit us, which is very nice. We're increasingly working with Eastern European markets, Russia being the biggest market at the moment for us. We're working in the Middle East. We've had inquiries from as far as South Africa, Nigeria, and South America. I was asked earlier, I mean, when you look at London, you look at New York, there's obviously two great markets there. What are the essential differences? But I just described the UK market as very principles-based. So it isn't prescriptive. It doesn't tell you this is how to do IR or this is how you don't break the law. By contrast, and I'm simplifying, so if you're from the United States, studied in the United States, or really love the United States, don't get me wrong, but the US is typically seen as a far more compliance-led, rule-bound market where they will tell you, this is what you can do, this is what you can't do. And if you get it wrong, clearly there's a legal system to back up what goes wrong. It's an interesting contrast because coming from the UK, I'm naturally familiar with the UK. Having worked in Southeast Asia, I can see that a lot of the principles-based approach to disclosing information make a lot of sense in all markets because I like being told ideally what the best practice is, how to go about delivering that, but I don't like being told exactly what I can and can't do. You all know working in markets, the markets are dynamic, they change every day, they have to respond to different external factors. So I don't think any regulator, excuse me, SET, excuse me, SGX and all the other regulators, can actually govern or dictate in market conditions everything that can and can't be done. It's just not practical. However, you can set out great principles, which I'm sure the SET does, just as SGX does, just as the London Stock Exchange does. And then you set the norms or the behaviours that you expect. And then you hope with professional training and development that your practitioners will understand and deliver. Of course it doesn't always work. And the UK is a very good example of where things have gone off the rails, where we have had problems. And I'll be discussing some of these issues in the presentation and sharing with you how it applies to IR and how it might affect what you're doing. Because you know what it's like, things happen in one market, eventually they reach another market. You're working in global markets. I mean, our raison d'etre, I won't bore you with, is clearly to promote best practice investor relations. We're set up as a company. We're run on a not-for-profit basis, so any revenues we generate, for example, from membership, which makes up half our revenues, it goes back into the membership to provide professional development courses. Professional development for us is an important part because members expect to get value out of the membership. And the way that we've managed to survive so long and continue to be relevant, not just to the IR industry in the UK, but to the government, who's invited us to get involved in public consultations, to other associations where we act as a voice for the IR industry, and indeed anybody else, including the investment community who's interested in IR, is clearly based on the back of our expertise in investor relations, whether through training, professional development, or acting as a voice, a lobby, or indeed actively participating in public consultations. So that's the IR Society. I've left with the SET a little pack of information on the Society. And what I'll also do is make sure if anyone wants my card, you've got that so you can see the website. And indeed, if ever you happen to be in the UK, you're very welcome to get in touch, or indeed drop me an email and hopefully I can be helpful. It doesn't have to be to do with the IR Society. It can be IR related. I correspond every day with people from all over the world. I'm very happy to share what I know. I don't necessarily know answers all the time, but I might be able to point you in the right direction. This is essentially what I was going to present today, but I'm not, as I said, because I think I'm sitting in front of practicing IR officers. I will pick up on what I think are issues or best practices and how they've evolved in the UK and possibly in other markets. And I think the most important element to share with you is trends, which is actually one slide at the back of the deck. Typical, eh? We put a title that doesn't quite match the content. You know what it's like when you're at school, you're expected to write an essay, you get some help and you produce all the material you know and you don't worry about the title. So the title's Global Trends, so I'll try and stick to the title. But the content may be useful for newer or younger IR officers who might be here. So I hope that you look at it in that way. And for those diehards among you, bear with me. And if you're unhappy or getting bored, stick your hand up, Richard, and challenge me. I've already covered this. IR's actually been an industry for many decades. It started in the West, really in response to companies having to explain more clearly why they needed money. So NERI in the US, which is National IR Institute, was formerly the first one. IR Society is the oldest in Europe. In Asia, I mentioned the IR Association in Japan, which is the first one under Asia. IRPAS and MIRA are Singapore, IR Professionals Association, Singapore, MIRA, Malaysia, IR Association. And what I didn't know, because I said I don't know everything and I am ignorant when I go from place to place, is actually Thailand's had one of the oldest IR clubs, as you call it here, which is a network of leading IR practitioners who clearly have been doing a super job, actually longer than a lot of, well, longer than the rest of Southeast Asia for sure, and possibly longer than the likes of Hong Kong, who have been a bit stop-start. But to their credit, Singapore, Malaysia recognized relatively recently it was important. They've set up associations and they've actually gone from strength to strength. I was personally involved in setting up the association in Singapore. We know how difficult it is to rely on a small core of IROs. In fact, Richard is one of our founding members of the Singapore IR Association, as well as, I'm sure, being a long-standing member of the IR Club here in Thailand, which is backed, of course, by the SET. So I applaud that. As I said, I'm a champion for IR, and I'm absolutely delighted to see that Thailand's actually been at the forefront in Southeast Asia, and I hope that continues. Okay, we'll skip through that one. I mean, this is your usual, you know, what exactly do you do? You'll know more than I how your boss, whether he's the chief financial officer, finance director, CEO, if you report direct to the CEO. I used to report direct to the CEO, so I was lucky that he understood IR. He set up the IR function and put somebody like me in charge of it. Interestingly enough, I didn't come from an IR background before I became the IR person at the exchange. I was actually their head of corporate strategy. But you all know that IR isn't one function. It actually draws on many key functions that any company has. So it is strategy. You have to understand what the direction of the company is and how you're supposed to be getting there. Clearly you need to be able to communicate, and you can see people like me could go on and on and on. So, you know, don't hesitate to raise your hands if I keep going on too much. Obviously you have to have some knowledge of financials, and ultimately I think you've got to be trying to espouse, trying to do best practice, which means being aware of all the regulatory operating environment aspects that you're undertaking. So it's very multifaceted, it's a very holistic role. I actually think, having worked in companies for 28 years, it's the best role in the company. So you're all very lucky to be IR officers or related to IR. I mean, who your boss is, I won't ask you, but the reporting line's really crucial. And some of us know that you have good bosses, and sometimes you can have not so good bosses. Of course, it would affect your IR. These are the definitions, so I'll skip through those. This is an important point because it relates to the issue of global trends. IR obviously can't really do everything. And the most difficult thing to deal with, as I mentioned earlier, is external factors. You work in markets, you know they're dynamic, you know news comes across your desk every minute of the day. Obviously you don't control that. So there's no way you can be managing, massaging, or changing what's happening around you. What you do have control of is your company's story, how your story is presented, and how that comes across to your target audience, the investment community. But I think often, and it's happened to me, everyone thinks, well, hang on, you're responsible for the share price. How come the share price has gone down today? Hang on, what's happening to the share price? Could you explain why the share price is moving? Obviously, you don't have a clue. I didn't have a clue in the whole time that I was at the exchange. But every day I can guarantee somebody was asking me, John, what happened, eh? What do you mean? Well, the share price has dropped today. Or, even funnier, share price has gone up. John, you're amazing. You guys must be working really hard in IR. Obviously, I had no impact at all on the share price in the short term. We were never measured on the share price because it just doesn't make sense. So I hope I'm clear on that.
John, but in Thailand, a lot of times CEOs and CFO wants IRO to manage the share price. How do you want us to respond? Especially me, I work as a consultant, and I go to many firms, and many firms wants me to help them, boost their share price. What's your response?
I think the real key, as is becoming apparent in the UK, I don't know if you followed the financial crisis in the UK as opposed to anywhere else, but one of the biggest issues was with the banks. A number of the biggest banks, including one that I used to work for, ABN AMRO, which was bought by Royal Bank of Scotland, basically went bankrupt and were acquired by the government, Lloyds Bank and various other financial institutions. And the issue there was, after many heart-searching consultations and conclusions, that frankly, the guys running the ship, the guys running the banks, were far too short-term oriented, far too focused on what it meant for them, including trying to move the share price with crazy acquisitions, crazy decisions, and far too forgetful that actually you can't make a difference in the short term. You're actually a steward, you're responsible for the company in the long term. And there's a slide later on the board. And if you go to the Companies Act in the UK, as I'm sure in Thailand or in Singapore or elsewhere, it's very clear that the responsibility of the directors is to ensure the long-term sustainability of a company. So if you've got some crazy CEO, and I don't know whether you have, who's jumping up and down about today, tomorrow's share price, then it is a bit of an issue. And frankly, the UK having gone through the scenario where CEOs became bigger than anybody, including the board, and were able to go off in crazy directions to boost the share price, to make sure that they got the rewards associated with so-called shareholder value, including moving the share price, has been proven a bit of a misnomer, if not a bit of a cock-up, excuse my language, a bit of a horrible mistake, in fact a huge mistake. So a lot of the soul searching that's been going on in the UK has been to do with short-term issues. I don't know if you've come across the K review. We have a very reputable professor called Professor John K, who looked at issues of the banks and where they went wrong. And his essential conclusion, which I can share with you now, and I like this, Sarah, because it makes it easier for me and then we can skip through the slides, is that actually the focus on the short term is completely wrong and irrelevant. So if you've got senior executives focusing on the short term, they're not doing their job properly. And the onus must be on this notion of stewardship. And then people in the UK say, well, what do you mean by stewardship? Do you mean the CEO managing the assets of the company? Do you mean the board acting as steward on behalf of the shareholders? And then, of course, the companies naturally turn around and say, well, actually, the company can only do so much. We'll do what we think's right. There is a strategic direction. It is supposed to be long-term. But even if we try to take that approach, of course, we've got investors providing capital, jumping up and down, saying that we're not doing enough to boost shareholder value, and by definition, the share price. So it's actually quite a complicated debate, and the UK spent the last couple of years debating this short-term versus strategic direction, long-term view of how to run a company. And of course, there isn't a simple answer. But interestingly enough, the K review concluded that the emphasis on quarterly reporting, for example, in the UK, is nonsense. If you get hung up on quarterly reporting and the CEO's under pressure to deliver every quarter, of course he's going to start doing things that aren't so long-term. If he's trying to meet analyst expectations on a quarterly basis, frankly, he's going to screw up. And a quarter is just not long enough if you're taking into account a long-term strategic direction. So his conclusion was scrap quarterly reporting. You'll know the UK is part of the European Union, so the European Union's got into the act saying, yeah, we should scrap quarterly reporting. Interestingly enough, the companies, including the IR Society, has come back and said there's nothing wrong with giving information on a regular basis. IROs do it every day. Some companies have useful stats that can be provided on a regular basis. When I worked at the exchange, we produced daily stats. Of course we did, because we were very transparent. All we did is trade every day. So you can see the trading volume, trading value. Those are useful bits of information for investors. Do you think investors take any notice on a daily basis? Probably not. Occasionally it might be of interest. So whether or not it's of use, some companies by the nature of their business provide information every day. Some companies by the nature of their business find quarterly updates, quarterly metrics useful. It doesn't have to be pure financial information relating to the share price. And some companies, frankly, if you think of infrastructure, if you think of long-term projects, obviously make more sense out of longer-term reporting. So I think the answer, certainly the IR Society's view, is you shouldn't regulate to the point of telling us how to report. If we want to report on a more regular basis, no skin off the regulator's nose or anybody else's nose, it might be useful for our particular target audience, the investors. So to say ban or scrap quarterly reporting might be a step too far. Now, you're probably thinking, gosh, I mean, where does the argument end? But I think ultimately, Sarah, it's about going back to basics, which is if you're looking